Ken, let me kick it off with you. Futures under pressure this morning, and that sell-off in tech continues. The retreat happened yesterday again. Traders spooked by higher interest rates as well as valuations within tech. Jay Powell is going to speak today to the Wall Street Journal about the state of the economy, and we are waiting to see if he says anything about this backup in interest rates. How are you seeing this market sell-off?
Yeah, first of all, I think Powell's going to double down or quadruple down or whatever, 10x down on the thing about, full employment. That's his goal, get inflation above 2%. Maria, I think this is more of a technical correction, not the fundamentals here. The fundamentals are very strong. We can point those out. But, we've gone too far, too fast, and some areas have gone parabolic. I mean, EVs and, all those areas like AI, and, we've seen them just go crazy to the upside. And, of course, we know how things happen. Eventually, you get some type of break. So, to us, the fundamentals of, again, the Fed cannot be any more dovish. Again, he'll talk about that today, the Wall Street Journal. And again, he's not caring about asset bubbles. You have the fundamentals, which are very strong, too. The $1.9 trillion. We haven't spent the last money yet in the stimulus. And on top of that, we have the reopening of the economy, vaccination rollout, and so forth. The back half of this year could be very strong. So I think what we're seeing here is a technical correction and a great rotation, Maria, from large cap tech. And now that we're reopening the economy, other industries can participate. So we're seeing a great rotation aside from a technical correction.
Yeah, I mean, certainly that rotation has been evident with people selling the money or some money that they made in tech. But, Ali, is it just valuation, or is there a fundamental issue with big tech? The major players dragged down the NASDAQ by 3% yesterday. This has been an ongoing trend. The tech-heavy NASDAQ on track for a third down week in a row. This is the longest weekly losing streak for big tech and the NASDAQ since September, Ali. Are there areas to step in here and buy the dip, or is there more to come?
Yes and yes on buy the dip and more to come. So look, NASDAQ was up 45% last year. Part of that was multiples expansion because we all had sort of a big question mark in the future. And part of that was the stay-at-home trade. So you just talked about, there are two narratives driving the market right now. One is the rotation from work from home to economic normalization. That is largely negative for tech, right? The second is the movement in interest rates an expression of future expected growth or inflation. That also is negative for tech. So what I think is happening here is there's this realization that not all tech is good tech. You need to stay in the tech and the companies full stop that have the ability to grow earnings and are cash flow rich. So right now within technology, that's TMT. Obviously, there is a specific issue in the supply chain for semiconductors that makes semiconductors a buy. And then big tech, you have to be careful. You can stay in it a little bit, but you have to get that rotation. Now is the time to get into things like industrials. So in industrials, we've seen household durables come down a lot as a result of what's happening in interest rates. There's definitely a buying opportunity there. Biotech has come down, healthcare data has come down. Think about what we have done in the last number of months and weeks that's going to add to the ability to cure diseases, to, just to get much more intellectual and monetary capital into the healthcare trade. So I would say don't abandon tech, but start to cut it down, start to keep it in line with your portfolio and follow that rotation.
Yeah, I love the idea of healthcare and biotech. I agree with you. That is really one of the growth stories of the world, and it's in the middle of this growth story. What about some of those travel companies that have been hit hard, so hard, Ali, during this pandemic? Are you ready to step in and start buying some of those very industries that were on the front lines of the lockdown? Restaurants,
yeah, actually, I am.
Companies, travel, airlines.
1,000%. Again, I think that that is part of the cyclical trade. That is, my personal experience. I got kicked off of a plane because it was oversold. The team at the airline said they hadn't spent in a year and were thrilled. So look, it's starting, right? New York just said that they're going to have jabs in everybody's arm who wants it and needs it by the end of April, beginning of May. So yes, step in, but step into those companies that aren't just going to benefit from a rotation full stop, but again, can grow earnings and cash flow because multiple expansion is not going to get you up on its own.
All right. Well, Want to look at rocket companies, Rob, crashing back to earth. The mortgage lender plunged better than 30% yesterday as analysts held their low price positions. This morning, it's up 0.5% as the retail investors sent the stock soaring more than 70% on Tuesday. You get whiplash looking at this. Similar story about GameStop that we were talking about just a few weeks ago. Do you expect more of these retail investor spikes?
Yeah, I think what's going on right now with the Reddit crowd, Maria, is they're kind of following the short interest. And if they can get a narrative that gets other members on Reddit excited, that's kind of what they're going after right now. So this is one that actually came up on our screens. And, you know, a lot of people have to remember there's a lot of different things in the market that move it outside of valuation. Valuation is one thing, but that's a long-term metric. Momentum in the short run is just everything. And what we're seeing with Reddit right now, they're just following that short interest, putting that narrative out there, and you're getting a lot of retail money, but there's also some institutional money, don't be fooled, that's following this trade. So I think we're gonna see this to continue. But you know what I'm really worried about, Maria, is that average investor. I was on a talk yesterday where someone was asking, hey, should I move some of my IRA into Rocket? You know, they don't really understand. A lot of these young people have only experienced a bull market in the last few years, especially with the stay-home trade. Those are the people that I'm worried about that need to be educated that these moves 30 to 40% up also come with moves 30 to 40% down.
All right. Well, we'll leave it there. I suspect we'll see more of these situations. Great word on Wall Street, everybody. Ali McCartney, Ken Mahoney, thank you so much. Rob Luna.